Hi everyone, good evening, and welcome to ValeTalk episode 4. Thank you everyone joining us live tonight on Zoom, and also to those who will be watching the replay later. We truly appreciate you taking the time to be here with us. Tonight's session is titled The Reality of Trading, Myth, Truth, and What No One Will Tell You. This is an important discussion because trading today is often presented in a very simplified way. Fast profit, instant result, and a very little conversation about structure, risk, and long-term sustainability. So tonight, we want to address that gap honestly and professionally. So let me introduce myself first. My name is Kaza, and I will be your host for tonight. I've been involved in the trading industry since 2014. And through the year of different market cycle, observing and client behavior and real world exposure, one thing has become very clear to me. Trading is not just about entry and exit. It is about expectation, discipline, and understanding how the market truly works. So for those of you who are watching live, feel free to type in the chat where are you joining us from. Welcome to ValeTalk, the talk that power your next move. Now, I'm pleased to introduce our guest for tonight. Joining me first is Mr. Manish Patel. Manish comes with extensive industry and professional exposure, particularly in understanding risk, structure, and how trading fit within a broader financial network. Also with us tonight is Alfredo Marentes from LATAM region. Alfredo brings a strong analytical perspective to trading, with experience in understanding market behavior beyond surface level signal. Gentlemen, welcome to ValeTalk. It is a pleasure to have both of you with us tonight. How are you?
Good. Thank you for the invitation. Glad to be here. Share knowledge.
It's really nice to meet you again, because the first time I attend this podcast in the episode 1, now it's episode 4, right? So basically, guys, I've already introduced you and myself. Now we want to talk directly to our audience what we want to talk about, right? So we have already seen we three of us already in this what we call it financial industry for so many years. You are the longest, Mr. Manish, right? So we have seen new trader often start with unrealistic expectation. So they think that they want to make money fast, they want to buy a Lamborghini, this and that, right? So we also see in a lot of social media right now, they are creating a false impression about trading. So we have seen people say that profit making money like hundred of dollars in 1 hours, right? So is this a reality or just a myth, right? So for segment 1, I just want to see what the new trader usually believe. So I want to begin our discussion, and I like us to focus on the starting point of the most trading journey. So before any strategy is applied or any risk is taken, we see traders enter the market with a certain belief. So this belief always shape how they trade, how they respond to losses, and ultimately how long they will remain in this industry. And I want to give you my first question directly. So from your experience, what are the most common beliefs new traders usually have when they first enter the market? And how do this belief influence their early trading behavior? Maybe Mr. Manish can start first, and then Mr. Alfredo can go later. Please.
Okay. So, Kaza, I think you summed up everything, the beliefs that most traders have. Let me give you a statistic. 98% of retail traders fail. Okay?
Yes.
And it's all because of the belief they have when they come to this industry. They think that trading's easy, and they think they could become a millionaire overnight. got the Lamborghini and everything like that. And it's all because of everything you hear on the internet. Remember, when you see posts on the internet, it's always good. Do you ever hear anything bad on the internet? Majority of times you don't. So the internet is very biased on everything. And there are situations where there are some traders that come to this industry, they get lucky and they get into a trade and they make a lot of money and so forth, but you don't ever hear the after result. Majority of traders that do make a lot of money very fast, you don't hear that they're broke today. And I'll give you a good statistics. We have in the US, we have a lottery here, and lottery is worth millions or billions of dollars. And if you look at the statistics of all the people that won the lottery, majority of them are broke today. They don't ever keep it. So they become rich and then they lose it all. And, there's many different reasons why and stuff like that. So, and the biggest problem that most traders have is they come to this industry thinking it's easy and everything, and they don't treat it as a business. Just like in a business, you have to have a trading plan. So it's just like you have to have a business plan in the business world. And that business plan is a 5-year, typically business plan. It's a 2 to 5 years. And you need to do that the same thing in trading. You need to look at this as a long-term scenario, not a short-term where you're trying to make $1 million tomorrow. And the biggest thing I always want to tell new traders is that if things are so easy and so great, why is someone trading against you? And what I mean by that is when you're buying, someone's selling. When you're selling, someone's buying. If something's so good that everyone's in it, why is someone selling on the other side? Remember, it takes two people to form a trade. And that's the thing you have to understand. So, that's the main thing, is that the misconception is huge. And a lot of traders are coming into this industry not trading probabilities, they're gambling. And you really need to take the emotions out and sit there and slowly, methodically be making money. Consistency is the key to becoming a trader, not a one-time fluke.
Yes, I agreed with you. So please, Mr. Alfredo, what's your opinion on this?
Thank you. I believe that Banesh pretty much summed everything up. And I believe that the main mistake or the main misconception that the new trader comes with is that they have the capacity or the ability to read the market like 100% or control the market. I believe Manesh says it on all the episodes, you cannot control the market, but it is very common that new traders believe they can, that if they have enough strategies, enough knowledge, enough indicators, they can predict every single move, retest, direction of the price. And that is just impossible to do. There's definitely a randomness factor when it comes to trading, or a factor that you can just not read or anticipate before. You just have to focus somehow on a repetitive edge that happens over and over again on the price and focus on that. And only when that happens, take a trade, right? But you cannot be trading every single movement, every retest, every direction. I see a lot of new traders that want to form part of every single movement of the price. When the price goes up, they want to buy. On the retest, they want to sell. Then they want to buy again on the second impulse. And that is just not logical to do. You cannot control the market. You cannot have enough tools, or you cannot have everything that will allow you to predict every single movement. And of course, this comes by hand with the fact of ambition. Believing that when you get into the market, when you get into trading, even though, for example, to be a lawyer, you have to study for about 4 or 5 years. To be a doctor, sometimes over 10 years. Why in trading is that different? Why in trading can you just make millions after 3 months? That does not make sense. You need time to study, to be a professional in trading, and then results will come. So there's these two factors that I believe that are the main mistakes of the new trader. That is believing they can control the market, and the ambition. They come here in trading believing that their lives will be sorted out because of trading, that their debts are going to be sorted out because of trading, that everything is going to be incredible and amazing because of trading. And that is just a non-realistic standpoint. You have to be attached to reality, feet on the ground, and see it as a long-term profession. That at the end, it is what it is, right?
Yes, yes, agreed. Actually, at the end of the day, guys, we are entering in this industry for one thing and one thing only. We want money. But at the end of the day, whatever that we want to find, we must have goal, we must have expectation, and we must ready to take the risk. In my experience, I already seen many new traders develop the expectation from exposure rather than understanding. We have already seen in a lot of social media, we have seen marketing content and selective success story that appear trading is simple, fast, and high rewarding. And at the end of the day, that is not true. That is the myth, because even though for three of us more than 5 to 10 years in this industry, we didn't say that we are like, we already have a Lamborghini in our house, or we are staying in a big house in Las Vegas or whatsoever. But at the end of the day, we need to have optimism on what are we are going to do, right? So yeah. So coming to our next segment, guys. I really love whatever that you already said. And for this segment too, the topic is actually what the market actually is, right? So as we move forward, it is important to shift our focus from expectation to reality, right? Rather than discussing what traders hope the market will do, this segment is about understanding how the market truly operates and why misunderstanding this often lead to frustration and poor decision making. So my question to both of you, how would you describe the true nature of the market to someone who is just starting up, especially in contrast to how trading is commonly portrayed online or in a marketing material? Maybe this time I want to give this mic to Alfredo first.
Surely. What I believe the market ultimately is the stock market or the financial markets is the sum of people buying and selling. It is just simple transactions over and over and over again. A lot of transactions daily, millions and billions in dollars in transactions every single day. Some of these transactions are sales from retail traders, some are sales from institutional traders, some will be buys, but it is just a constant exchanging of positions of in buying and selling in the market. That is the nature of the market itself. But in reality, or not in reality, but what is behind at the end, it is everything is either to every position taken from institutional or retail standpoint. The idea behind it is to get something out of it. For institutionals, might be to hedge their positions with option trading or with futures trading. It can be different depending on the objective of the institutional, but ultimately what everything wants or what everyone wants in the market is to make money from those transactions, right? That's why we are traders. That's why trading exists. It's because of the capacity to make money from those transactions. It is as simple as if I go to the store. In the store, I buy bread, for example, a loaf of bread. I buy it for $10 and I am able to sell it for $15 outside the market. That's the intention that everyone has in that market. But as Manesh says, when you win, there's someone losing. When you lose, there's someone winning what you lost. You need a counterpart to be able to form a trade. As Manesh said, you need two people to form a trade. So in that sense, it is like I see it in a way that I see it is some type of a battlefield. You're battling when you get into the markets. You're battling against other traders, against machines, against institutions. It is a battlefield of a lot of people that they are all trying to get the same objective, that is to make money. But now, you as a retail trader do not have the tools and do not have the advantages that the institutional traders have. You do not have the research tools, you do not have the trading tools, you do not have the algorithms, you do not have the machines. So you are quite in a disadvantage if you are just trading without an edge, right? Without anything that gives you that extra in terms of statistics, right? Of an edge in statistics, that sense. But yeah, I believe that the market ultimately is a battlefield between a lot of people that are trying to reach the exact same objective, that is to be able to make money from the markets.
Great, great. So yeah, please, Mr. Manish.
So mine's going to be a little more complicated. I think the market is a human mind. You're dealing with the psychology of a human mind. It's what you think is going to happen and the actions a person takes. So when you start looking at charts and everything, it's the actions people are taking based on their thought process of something that's about to happen. And that is not predictable 100% at all. No one can predict the human mind with 100% accuracy. And a lot of people come to this industry thinking that they can control the market and there's a strategy out there that's 100% correct and stuff like that. It's wrong because you're dealing with human psychology, human thought process, and the actions taken behind it. So the only thing you could do is you could see what a huge amount of people are doing at one time. And if they're all thinking the same way, then you'll see price going in one direction continuously. And then at that point, you get in trading that particular direction. But you don't know when it's going to end. You don't know exactly when it's going to start. You don't know when it may fluctuate for a while. You don't know when people are going to take profit taking or anything like that. So nothing is completely 100% out there. So the only thing you could do is trade your probabilities, and that's it. So you have your system, you're trading your probabilities, and you got to manage your money, and that's about all. A lot of people think indicators are the solution. They can't be. Think about this. If you go to the internet, you search on the indicators, you have over 1 million indicators out there. And then if you have a programming background, that combination goes to 1 billion. So if there was an indicator that could give you everything out there, why do we have all these internet searches and all the different indicators out there? It just doesn't make sense at all. And remember, if you're buying, someone's selling. And if something's so good, why is someone selling? So there's always someone on the opposite side of you thinking completely different with you. And I'll end with one remark. 98% of the people fail because they follow the crowd. They do what everyone else does. If you're doing what everyone else does, then why isn't majority of traders winning, profitable? It just doesn't make sense. So you cannot follow the crowd theory at all. You have to think differently, and you have to think on trading the probabilities. So if people are buying continuously and you get in, your thought process should be, okay, when's this going to end? When's this going to end? I need to protect my profit. So you got to be in defense mode and always be prepared and not thinking it's going to go to the moon. And Bitcoin's a perfect example of this, where a lot of people today are thinking Bitcoin's going to be 500,000 or so forth, or even now, Bitcoin's supposed to typically goes up in October, at the end of October, going up November and December. And normally Bitcoin's over, there people are predicting it's going to be over 150K. And right now it's 87, half of what people predicted. What happened to going to the moon? So, you have to think of the worst case scenarios and be prepared for that. So that's where risk management and everything has to come into play, because you cannot control this market because it is human behavior, human psychology that's behind everything that we're dealing with. It's a little more complex.
Yeah, a little bit complex between both of you. For me, I think I always say that I often emphasize that the market is not a system designed to reward effort, confidence, or intention. It moves based on liquidity, sentiment, and a broader force far beyond any individual participant, right? So the market does not respond emotionally. So the market doesn't care about you. The market doesn't care if you are losing or winning, right? So it just and it doesn't care about your personal goal or your expectation. So traders who fail to accept this reality often find themselves fighting the market instead of learning how to work with it, right? So in Malaysia, we always said a lot of people are doing revenge trading, right? So yeah, a lot of people are doing revenge trading now, and it's just the same before, but much more trader has doing the revenge trading now. So yeah, at the end of the day, this is the reality, right? So Manesh, you want to say
Kaz,
anything?
yeah, Kaz, do you have a crystal ball for the market?
Why?
Yeah, do you have a crystal ball for the market?
If I have money, I will be rich, and I will not be
Everyone
the
thinks they
host
have
for
a
this
crystal
podcast.
ball.
Yeah. I hope so. I hope so. So yeah, we goes to the this. I think as a host, I want to manage the time, so we want to go to the next segment. This is, I guess, the most interesting segment for me. So this segment is the topic is the real cost of trading. So for this segment, we are focusing on a side of trading that is rarely discusses openly. So most conversation revolve around profit, strategy, and performance, right? But there are other costs involved in trading, costs that accumulate quietly over the time and play a major role in whether a trader survives or not. So my question to both of you, beyond capital and technical knowledge, what do you believe is the real cost of trading that many traders only realize after spending significant time in the market, just like three of us? So please, Mr. Manish.
Wow, cost of trading, looking back, I mean, it's huge monetary, of course. There's a whole bunch of indirect costs, time, uh, the mindset, the psychology, right? Especially when you lose, you don't feel good, this, that, all kinds of things. Dealing with family members, dealing with friends, because when you lose, you always have friends and family. They're going to be the first ones. I told you this is not the right place to be. You need to go get a job. You need to go do this. Trading is not the way to make money. For me, my biggest obstacle was my family.
Yes.
Coming from a Hindu background, trading was never accepted at all. In fact, I wrote the Ichimoku book just to prove to my parents that I'm a real trader. In Hindu culture, they always think that you're going to gamble the house away and gamble the whole life savings away. So it's always proof to family members and friends and stuff like that to show them that trading is real. You can make a profession from it, and not lose everything out there. A lot of time spent behind trading, a lot of emotions because when you blow out your account, the question is, are you going to come back? Every time you blow out your account, are you going to come back and start to trade again, or is that it? Most traders, if they blow out their account 2 or 3 times, they walk away from this industry permanently. But that was never the case for me. I wanted to make this my full-time profession because I saw the potential in it. So I didn't want to give up on it, no matter what the cost was, from financial to emotional to everything. It also takes a hit on your body. When you get stressed out, most people start eating. You'll get bigger, you get unhealthy, right? So,
Are
there's a
you
lot
talking
of indirect
about me?
cost. Sorry?
Are you talking about me, Mr. Manish?
No, to me. I mean, you see me today, but believe it or not, I was probably bigger than I am today, twice as big, because it's at a point where I really got stressed over years. It took a toll on my body and everything, and only since I think 6 years ago now, I now start doing CrossFit and everything. So I've now trimmed down drastically, right? But it takes a toll on you in every aspect of your life. It's stress. Trading is not easy. It is stressful. I mean, I have a lifetime supply of color your gray hairs. But it's stress, and that's the indirect cost that most people don't see at all. To get to the level I'm at today, yes, I'm successful as a trader and everything, but it's not just a financial toll that you took, it's the stress. And stress has a bigger value than the financial cost out there because it deals with your health, it deals with your family life, it deals with your friends and everything out there. So to me, that indirect cost that a lot of people don't see is that stress factor and how it takes a toll on you.
I completely agree. If I may take the word now, Casa, I
Yes,
believe
please.
that there's a lot of extra costs that people do not see. I mean, you have the explicit costs, that is, of course, the monetary and the technical cost, like very specifically of the nature of trading that will be direct with money, because trading is all about money at the end, right? It is either winning or losing money. But I do believe as well that there's a lot of extra costs that might not be seen initially. And I believe that some of them can be good in the sense of, for example, how you develop your emotional intelligence. If you force yourself to do so, how you can develop your emotional intelligence with time because of trading. For me, I used to be a very anxious person. Very anxious. I remember that, for example, when I was at school and the week of exams at school, the week before I was going to be throwing up, feeling extremely bad and extremely nervous because of the following week. I was a very anxious person. When I started trading, of course, at the beginning, when I lost, I remember at some point very early at the beginning when I blew up an account, I remember throwing up and feeling extremely bad stomach-wise and stress-wise. And the emotional intelligence that I used to have was very bad. I used to be extremely anxious, a very anxious person. And trading at the end, you have to get comfortable with losing when you're a trader. You have to get comfortable with the ugly emotions, with the trade being only 2 points away from taking your take profit and then reversing and going break even or stop loss. I mean, it's part of the game, and you have to kind of just embrace what you're doing and embrace the nature of trading. And that comes with a lot of emotional challenges that will translate into what Manesh said, that is stress. And stress for your body is one of the worst things that can happen to your body. In my case, I didn't quite develop or gain weight because of stress that translated into eating, but I got into a caffeine addiction. I used to take, I don't know, like 4 cups in just a time span of 2 hours, 4 cups of coffee. And the caffeine addiction is something that you might not see initially, or do not see the problem, or you do not see the reason, but it definitely has to do a lot with stress and the nature of trading, of being very emotional into it, then translating it into constant stress and stress and stress every single day when you perform on the charts, right? But ultimately, I believe that if you adjust and if you take the right path of taking the advantage of, hey, trading is putting me on an emotional challenge. I'm going to grow emotionally. I'm going to grow my mindset and become a better person than I was before. Now I believe that I am much able or less much more comfortable with losing in all senses. If I go out and if in that day I have a bad day, or if I go and play some sports and I lose at that sport, trading made me much better loser, and much more tolerant to frustration. If I fail in any sense, I am much more tolerant to that and able to try it again and again and again and again until I make it. And that is thanks to trading. So even though there's, of course, extra costs on trading, that is time, stress, emotional challenges, monetary losses, there's also a growth that comes from trading that you can apply outside the charts. And that is also a very beautiful thing that I have seen in my personal life, how I have improved my emotional intelligence, my mindset, and that is definitely thanks to trading and thanks to all the bad times that I had because of trading. Nights that I went to sleep crying and crying and crying with a lot of frustration because I lost my money, because I lost maybe a client's money, and the sense of I do not know what I'm gonna do now, and just waking up the next day trying to find out a solution for the problems that you are in because of trading. But with time, that everything becomes growth. Everything becomes an improvement for yourself. And that is also a very nice thing that will come with trading when you're in trading for a couple of years. And it is something that I am extremely grateful. I mean, I always say that trading changed my life in every single sense. And it is the thing that I am most grateful for, along with my family. Like at that level, it is how I feel about trading.
Yes, yes. So both of you, when we talk about this topic, right, we talk about financial losses, emotional damage, right? But for me, I see that a lot of traders are thinking that financial losses is often seen as the main cause of trading, right? But I believe the greater cause is mental and emotional, because people will go crazy because they lose money. I've already seen a lot of people, I don't know in other country, but in my country, Malaysia, traders that, has a lot of emotional and mental problem just because of this kind of thing. They lose money, they lose their home, they lose their family. Sometimes they lose their self, right? So actually, trading demand patience, discipline, and resilience, particularly during period of drawdown of stagnation, right? So it forced traders to confront fear, impatience, ego, and inconsistency on a regular basis. So these costs cannot be measured by number, right? But they ultimately determine whether a trader can remain consistent over the long time. Because as a trader, we don't want to trade like 1-2 years and then we are giving up. We find another else to do and we are giving up again. Because trading is, I always call trading is a game of mind, right? Because you can see your true self when you become a trader. Maybe in front of people, you are a good guy, you are introvert, you are this, you are that. But in front of a MetaTrader 4 or 5, you are a different person, right? So I really love talking to both of you, but this is the final segment for three of us. Why expectation break traders? This is the final segment. So to conclude our discussion, I like us to connect everything that we have covered so far. Belief, market reality, and cost all point back to one central issue. That is expectation. How traders manage the expectation often determine how they behave under pressure and how they respond to setback. So my question to both of you, how do unrealistic expectations affect a trader's mindset and a decision making over time? And what should traders focus on instead if they want to build long-term consistency and longevity in trading? Maybe this time we start with Mr. Manesh first.
Okay. So in trading, I think you summed it up in a minute ago. It's you against you. There's no employees. There's no nothing. It's you trading against yourself, your strengths, your weaknesses, everything. If you have expectations out there, they could go against you. So you really got to take you out of the picture completely and trade these markets with probabilities. The more you get involved with your emotions, with yourself and everything, the more you're going to fail. So you have to sit there and take that completely out. You know, it cost me millions for my nature to come out because I was an engineer. So as an engineer, you have a tendency of thinking a lot, overthinking and everything. And that cost me millions of dollars in the market because I was still being an engineer. You can't be an engineer. You can't be anything. You have to completely take yourself out of the picture, trade your system robotically with no emotions and trade the probabilities. And that's literally what you have to do. You have to take yourself out of the market completely, where you're not going to basically lose against yourself. And this is the only industry where it's you against you. And so it's the psychology stuff, everything goes into it. So you have to take everything of you out of the picture and just trade the probabilities. And that's basically the sum, I think, of everything.
Okay, please, Alfredo.
Thank you, Gaza. I believe that the problem with unrealistic expectations in trading and in life is that since your goal is so far away, any improvement is not good enough. If your goal is to double your account daily, getting a 1% win is nothing for you. It is like, I just won 1%. It is nothing. If my goal is to double it, to get 100%, 1% is 1% of my goal. So
Yes.
I believe that setting unrealistic expectations ultimately leads to a lot of frustration because nothing is good enough. No improvement is good enough. So I believe that the way that you can turn that around is maybe have an last or ultimate goal in that sense, like the unrealistic expectation. Like in 5 years, I want to be able to buy a house and a Lamborghini. But you have to establish your next goal. Like right now, I am here as a trader, and maybe my next goal is to completely respect my plan. Respect what I have established, my maximum risk, my maximum trades per day. And once I accomplish that, then I move on to the next goal and to the next and to the next. So instead of putting a goal so far away, you establish a path and some type of like a stairway to your ultimate goal. And that leads to actually accomplishing things, feeling good about you accomplishing those things, being able to see that you're actually improving as a trader. And that puts you on a path of consistency and discipline. And that will make you much more likely to be a real trader and to win from trading.
Yes, I agree with both of you. But and in my point of view, unrealistic expectation are actually one of the primary reason traders fail when expectation are misaligned with reality. I often say that traders always stay in a multiverse dimension. They are dreaming about sport cars. They are dreaming about their bank account will have $1 million and so on. But when they are in a different dimension, they always become impatient, emotional, and inconsistent. Right? And decision making weakening. They do risk taking. They increase their risk taking, and their discipline is done. They are done. So over time, it is not the market that causes the failure of the trader. but the trader's emotional respond to unmet expectation. So this is the main reason why we are doing this podcast, right, guys? We want you guys to understand, the audience that are watching now, to understand that you need to separate the reality and the myth of trading. Don't ever again, after watching this podcast, that you are thinking about making million. Just thinking about how to consistently make money every day. 1% is money, 5% is money. You must be realistic with your target, right? If you're having like $1,000 of capital, but you are targeting like a $1,000 of profit every day, I always give this terminology. If you have a capital to open a coffee shop with a $1,000 capital, you cannot expect to make profit like what Starbucks do, right? If you're thinking like 1,000 can become 1 million in one day or 1 week or 1 month, it is not impossible, right? But I always heard from many traders before, traders, nothing is impossible in trading. Yes, nothing is impossible, but I mean, from my understanding is you can lose everything or you can win everything, right? So guys, I want to give you like 1 minute of closing ceremony for this podcast. Maybe I want Alfredo to start with 1 minute and then we goes to Manish.
Surely. Well, what I can say to all of our viewers and to all of the people that will watch this maybe afterwards is that trading is a beautiful profession. It is an incredible journey. It is something amazing. I believe it is, as I mentioned, one of the best things that ever happened to me. But
Yes.
it is not free. It is not easy. It is not just, yeah, you get into trading and you become successful. Nothing good is built overnight. All good things, all empires, all companies, everything that is good in this planet is built with patience, with time, with consistency, and with a lot of effort, with a lot of effort, with a lot of challenges, with a lot of bad experiences, and based on failing. In trading, as in every single business in life, you will fail over and over and over again, but that's okay. Failing is the best exposure to knowledge, is the best way to get knowledge. The best lesson that you can ever get is failing, is losing. So get comfortable with losing, get comfortable with failing, but get better as a trader, get a better mindset, better discipline, better consistency, and use all those failures, all those losses as knowledge to impulse your career and impulse your mindset, impulse your discipline, and become a real trader. That's what I would like to say.
Yes, please, Mr. Manish.
Those perfect words, Alfred. To me, just like in everything in life, it's a yin and yang. The trading has given me the financial freedom uh, that I never expected, where I could be with my kids and everything. However, there was a lot of cost involved to get to this level. However, I would not trade that for anything else. This is the only business, it's you against you. And you could take a little money and start to grow it to become financially free, and you control your own destiny. It's not controlled by a boss, it's not controlled by anyone else except you. So I'm in control of my own destiny, which is exactly what I wanted to do. So, and you could start with a little amount of money, even $100, and you could slowly, methodically grow it as long as you have the correct mindset to do so. And, as we talked about in here, you can't have these expectations at all. You can't control these markets. You could only take what the market gives you. If there's $5 on the table, you could only probably get $2, $3 of it. You can't get the whole $5. You can't get 20 because that doesn't exist. You could only take a portion of it, and that's about it. So expectations have to get thrown out the door, and you have to take what the market gives you day in and day out. And you can't think today's the last day. You're always going to have tomorrow over and over and over. This is a long-term process where you're looking to be consistently profitable. And those are the key things that, for me, have taken away from trading and everything along the whole journey.
Okay, thank you, both of you. But before we end this podcast, maybe I want to open up if we have a question from our audience, right? So, guys, if you are watching right now, you are listening right now, if you have a question, please do so before we wrap up everything tonight. So, if you have any question, please ask. But before we are waiting for the question, guys, actually we have our point of view in this week episode, right? But my question to you is what are the main reason we are what are the main reason this market is like going up or down, and people are quite emotional when following the market, right? People tend to just do the entry without doing the analysis, right? Because we are waiting the question. If we don't have the question, maybe you can answer like 30 seconds. Just a short answer.
So for me, I'm not looking at these charts over and over and over. I have alerts. They tell me when there's an opportunity there. When an alert gets triggered, I look at the chart. If that's there based on my trading plan, I execute, and that's it. I'm not going to think about the markets going up and down. If I see a particular instrument going up and down, I'm moving on to something else. I'm not going to try to make something out of nothing. And a lot of people try to do that. So my biggest comment to everyone is be diversified. If you're diversified and trading many different instruments, then you're not going to try to force something that's not there. That's my 30 seconds.
Yes, I agree. What about you, Alfredo? What do you think?
Well, I believe, I believe that emotions in trading is very common because it involves money, and money is a very delicate thing, right? For everyone, money is at the end taking away family, friends, and human interaction. Money is probably the most important thing that we have in our lives because it is access to basic needs such as living, food, electricity, as well as maybe other things that are not just primarily necessary, like a phone or a computer or other stuff, right? But yeah, I believe that there's the strong relationship between emotion and trading is because of money. And the right path or the right thing to do is detach from the money, as I believe that just seeing the chart in that sense, and as Manesh says, do not try not to spend much time in the chart, because if you just see the chart constantly, like nothing is going to happen. Just because you're watching your trade is not going to go to take profit, right? The market does not care if you're watching. So I believe that you have to detach from the money, and ultimately as well kind of detach a little bit from the graph itself.
Yeah, I agree. So guys, I guess we don't have a question. That's it, guys. We are done for tonight. So before we wrap up tonight's session, I'd like to thank both of you guys, Mr. Manesh and Alfredo, for spending your time to share your perspective and experience so openly. So your insight have actually added depth and clarity to a topic that is often misunderstood, right? So guys, to everyone watching, I hope this discussion has helped reset your mind and the way you view trading. the reality of trading is rarely glamorous, and it is certainly not easy, but it is honest, structured, and demanding. So, if there is one takeaway from tonight's discussion, it is this: trading reward realism, passion, and consistency far more than excitement or shortcut. People love a shortcut, right? So the sooner the expectation align with your reality, the stronger yourself as a trader foundation became. So guys, thank you once again for joining us on ValeTalk. If you found value in tonight's discussion, we encourage you to watch the replay, share it with your friends, and continue the conversation within our community. On behalf of the ValeTalk team, I wish you a very good luck for your journey as a trader. Thank you, Manesh. Thank you, Alfredo, and have a very good evening. Bye bye, guys.
Thank you, Kaza, Alfredo. Bye-bye.
Bye bye.
Thank you guys. Goodbye.